Silver is a speculation, and here's why. Today, we're going to be talking about silver and why I think, in a lot of ways, it's a speculation. Now, I know a lot of people in the stacking and prepping community are going to say, but Michael, of course, like we have to have a certain amount of silver in case SHTF situations arrive, right? SHTF?
Oh, yeah.
Stuff hits the fan, right?
Stuff.
That can happen. But I think that argument is great. I love that argument. I completely agree with it. Stack your constitutional silver, stack your dimes, your quarters, your half dollars. All that stuff is great. Stack 1 ounce rounds and coins. I think that's great too. But once you get to a certain volume, I think it goes from being just making sure I'm okay if SHTF to this is a speculation. Now, what do I mean by speculation? I think a lot of people think that has a bad, it's a bad term, it's bad jargon, it's pejorative, it's an insult. I don't mean it insulting at all. In fact, I look at investing, trading, speculating, and gambling as totally different things. Investing, I define as buying cash flow generating assets that spin off profits to you over time. These can be parcels of land, they can like the real estate, this can be stock investing, this can be bond investing. The problem with today, I think, is that there just aren't a lot of good investments out there, and those good investments that are out there are probably overpriced. So it's a little bit tough to do that today. I look at trading. Trading is using usually technical factors, but in any case, buying, not really for fundamental reasons, but buying certain assets with the anticipation that you can make capital gains or money or currency off of change in price.
So would it be like, for you, investing is like a fundamental analysis of an item or an investment, and trading is like a technical analysis of an investment?
Yeah, it's a little more technical, sure. Yeah.
I think of trading as shorter term.
It can be, but you can have long-term trades too.
Yeah.
Yeah, like a long-term trade might be you pick up a piece of real estate that may or may not, it really doesn't spin off cash. It's just a parcel of land, empty land in a city, but you think eventually the city's going to recover from whatever's going on and you can sell the land for a higher price.
See, I would think of that as an investment then. But I get what you're saying, it's got an element, maybe, would trading maybe have an element more of speculation of a larger move?
Well, that's why I bring up speculation as being an entirely different thing.
Fair enough.
And actually what I described is probably a little bit more akin to speculation and trading. I'm trying to separate these out into discrete categories, but there's so much overlap. Mm-hmm. So speculation is you do some fundamental analysis, and maybe you're also doing some technical analysis. You're trying to make a trade. At the end of the day, you are trying to sell at price A, or sorry, buy at price A and sell at price B, and you want price B to be higher. That's what the trade or speculation. But speculation, there's a certain edge that goes beyond technical analysis. It goes beyond random chance. I think that structural factors behind a certain asset are going to cause it to increase or decrease in price substantially over a period of time. Mm-hmm. And that time might be weeks, it might be months, years, decades. That's speculation. And with commodities, speculation is a way. You look at silver markets in the period of time in the past. You look at uranium markets in the past, gold markets in the past, copper markets in the past. So some of these markets have been cornered by speculators.
Go ahead, sorry.
Where speculators have taken over 50, 70% of the market and can effectively control prices. Yeah.
Well, I was just going to say that when I think of speculation, I tend to think of commodities.
Yeah. Well, because commodities are by definition commoditized, they're made fungible with each other. Therefore, they can be traded openly on a market and easily speculated upon, and traded against each other. So, and then the last one would be gambling. A lot of people say investing or trading or speculating are just gambling. I'd say not to be really insulting or mean, but I think a lot of those people are speaking from a position of being hurt from losses. They at some point made an investment and perhaps they didn't do due diligence, or they didn't position size correctly, or it went against them and they held on to it for too long. All these things have happened. By the way, all these things have happened to me at different times in my life. So it's easy to turn around and say, well, this is all just balderdash, poppycock. This is all just garbage. It's easy to be burned investing or trading or speculating. And it happens to a lot of people. And so they say derisively, oh, that's gambling. Or some people who have no experience in any of those things would say, oh, that's gambling.
Well, they probably don't for that reason. You know, they're dismissing it as too risky, so they don't want to participate.
Right. It's a fear that they have. So, and then there's two types of gambling. Oh, gambling is easily defined. Random chance. There's no edge one way or the other. There's no technical analysis. There's no fundamental analysis. There's nothing that gives you an edge. You're just buying something, or you're putting money into something. You're rolling the dice. It's pure chance, and maybe you win, maybe you don't. Exactly. Okay, and then there's two types of gambling I'll point out to you. There's equal or no house gambling, where there's no house taking any cut of that. This would be, you and 5 other buddies get together, you play poker, you each put $20 into the pot. Whoever wins overall, they get the $100, right? Or 120, whatever the example was. But they get the whole jackpot. That's or a raffle ticket. A raffle that's just a pure raffle. Nobody's taking a cut of it. And then you have gambling where there's a house involved. You go to a casino, you play blackjack, the odds are stacked against you. Over time, you'll lose, on average, 1.5% for every dollar you put in, if you do it enough times. Or this is a gambling I don't mind, but Catholic churches do this a lot. They'll have raffles, right? And they'll
the 50-50.
The 50-50 raffles. So in order to encourage people to donate to the church during certain events, they'll have a raffle, and they'll collect maybe $10,000, and they'll keep $5,000, and they'll give $5,000 to one of the raffle ticket purchasers. Okay, that's fine to do as charitable donation. I don't have a problem with that. As an investment, obviously, it's not. It's a gambling thing. But okay, so those are two different types of gambling. And people get really burnt by gambling because they're just working on pure chance, or worse yet, most of the time they're working against a house, and the house is going to win.
Yeah.
So
I will say, as a gambler, not an avid gambler, and not someone with a problem with gambling,
that's
but
what they all say.
As a recreational gambler, I just want to say that I agree with your general points. But I do think there can be strategy in some games that you gamble with, and therefore you have a higher chance of winning. Knock on wood, I guess, for my next game. But that being said, I mean, in a general sense, I agree with you. I just have to put in my 2 cents as someone who likes to gamble sometimes. Well,
with the exception of the prodigally talented gamblers who really know what they're doing, of which I am not one. The rest of us have to contend with chance, and that the odds are either even or they're against us.
Okay,
right?
Fair enough.
So getting back to silver, why is silver not a gamble? Why is it not a technical trade? Why is it not an investment? Right? Silver is not a gamble because there is not pure chance here. There are a number of market forces for and against price fluctuations in silver. Right? We can all recognize that. I don't have to go into detail about that. All the stacking community knows these. There are industrial factors, there are monetary factors, there are mining factors. But if you guys want a refresher on that, I'm happy to drop another video on that. But
can I ask one question?
Sure.
Would those same factors apply to gold, or these are specific to silver?
Specific to silver, and also some apply both to silver and gold. You guys know what I'm talking about. Okay, so it's not gambling, it's not pure chance. There's also no house, really strictly speaking. There are, I guess, silver custodians that might hold on to silver and charge a small fee, but that really doesn't count as a house, in my opinion. You could argue maybe it kind of does. But anyway, I call that cost of investing. All right, it's not a trade per se for most of us because we're not using technical analysis for it. Other than general ideas like silver and sugar are the only two commodities to be underneath their 1980 price in today's dollars. Mm-hmm. Well, that can be kind of a technical trading thing, but for the most part, it's really not a trade. It's not an investment, too, because as nice as all this silver is, it's not going to... I mean, this silver bar and this silver bar aren't going to get married and make more silver bars, right?
There's no dividend.
As much as I'd like to see that.
Is that what you think about when you think of stocks with dividends? That they're having babies?
Well, I don't know. My point is...
But it's... Yeah, they're not reproducible.
Right. So these are finite, and there's an opportunity cost. There's an opportunity cost in holding physical silver, whether you have it in depository, where most of mine is, or if you have it, in some location that you can get to that's preferably not your home, that's nearby to you though. Those are opportunity costs. They're carrying costs because you have to hold on to them, and then there's opportunity costs because the wealth or capital that you put into buying that silver, you're not putting in investments. You're not putting it in stocks. You're not putting it in bonds. You're not putting it in real estate that can generate cash yield for you.
That can make babies.
That's right. That can make babies.
These just can, I guess they can gain weight. They can eat, but they can't reproduce.
Now, technically, silver mining stocks are kind of their own thing. We can get into that maybe another video because I don't want to get too much into the weeds there. They're kind of a mix of investment and speculation, in my opinion. But buying physical silver, again, once you have enough for maybe a year or two of groceries, or maybe 1 or 2 or 3 years of living expenses in denominated, finely denominated dimes, quarters, half dollars, whole dollars, ounce, 1 ounce coins, etc., or rounds, bars. Once you have that stock of silver, that's enough to make sure you can feed your family if things go really poorly. After that, every ounce of silver you buy beyond that, in my opinion, is a speculation. You're speculating on any changes in price. I don't think there's anything morally wrong with speculation. I think it's a good thing to do. Generally speaking, whether maybe it's with silver, if you want to put a position of speculating in that, or if it's other commodities or it's other things, this is supposed to be a generally free market. We're supposed to be able to buy things that we think are cheap so that we can sell them when they're dear. That's the essence of free markets, classical economics. I mean, that's right there. Adam Smith says it in The Wealth of Nations. That's kind of the point of this whole thing.
Yeah.
So if you believe that, as I do, that silver is an asset that most of the world is overlooking, that most of the country is overlooking, and that there's going to be a substantially increased demand for it in the future, then maybe you do. Maybe you buy enough for yourself and your family, and you do the prepper stacking thing. And by the way, Yankee Stacking's triangle of the prepper stacker, the trader or investor stacker, and the collector stacker, I think it's a great way to describe it. We'll link to that video. That's just a beautiful video. His older videos, I think, are probably his better stuff. I like his new videos too. The production's great. Tim's great. His older videos, though, there's just so much wisdom buried in those.
I mean, that's what turned you onto him, right?
Exactly. All of his older stuff is the best because it's just so absolutely right. It's practical. So if you haven't at this point, go check out his older videos. They're just fantastic. Especially his how to stack the Yankee way. It's just a great way to look at it. But yeah, once you get beyond that minimum that you need to make sure that you can get through SHTF for a couple of years, I think after that you're probably speculating. And I think if you look yourself in the mirror and you think about it, what am I really doing this for? How much am I really looking at prices, and how much do they matter to me? I think you can probably acknowledge, a lot of us out here can acknowledge, we're doing a little speculating, but that's okay.
If you have to break it down into terms of like percentage gold or silver that a person would hold, not to speculate, but as a means of prepping for SHTF, what do you think would be an appropriate?
That is so funny you bring that up, we didn't script this, so I don't think she meant to. That's going to be the subject of one of my next videos, which is going to be where to store capital you have that you might need in the next 1, 2, and then probably 5 and 10 years in the safest way to make sure you can preserve it. Do you go all gold, all silver, all US dollars, or some mix in between? So stay tuned. That's going to be coming up here shortly.